Good evening, everyone, and welcome to another edition of ERA's Realty Talk. Thank you for joining us this evening. Tonight, our CEO Marcus Chu and KEO Eugene Lim will unpack a key question on many minds. What should you do in today's property market? While the market is shifting, opportunities remain. As prices moderate and transaction volumes adjust, is this a pause or a window of opportunity? Join Marcus and Eugene as they break down the latest developments and share clear insights for homeowners and investors. Meanwhile, stay connected with ERA on social media. Follow us for the latest property insights, market updates, and real-time opportunities. Scan the QR code and join us on our social media platforms. Do also stay updated with the latest insights from ERA. Our blogs cover key property trends from new launches and BTO updates to investment opportunities. Scan the QR code to explore more and make informed decisions with confidence. Before we begin, please note, while every effort has been made to ensure the accuracy of the information shared today, ERA accepts no responsibility for any loss or inconvenience caused by errors or omissions. The insights, opinions, and examples presented are for informational and educational purposes only. As the property market is dynamic, we strongly encourage you to consult a trusted ERA advisor before making any property-related decisions. Please join me in welcoming Mr. Marcus Chu and Mr. Eugene Lim to kickstart today's Realty Talk.
Hello everyone, welcome to another segment of Realty Talk with CEO Marcus Chu. And thank you for joining us. Hi Marcus, welcome.
Hello everyone.
So Marcus, what will we be talking about today?
We have quite a lot of things to share with you today. Actually, today in reality, we want to bring you clarity in three things. Firstly, what just happened in the market, that is Q1 2026. Cut through the noise and understand the latest data and what that really means to you. Where the market is heading next, why demand remains so strong despite what is happening in the global scene, and why prices in Singapore real estates are still supported to grow. And also, we will touch on what you should do next. Isn't that the most important? Should you be waiting, buying, or upgrading, or selling? And why timing matters today. So in short, we're going to look at all the big data into a direction and into a decisions. So let's dive into the data. Is now still the right time, Eugene?
Okay, let's look at the chart. So for non-landed home prices rose while landed and HDB prices fell. HDB prices fell for the first time since second quarter of 2019. After 26 consecutive quarters.
Wow,
of growth.
26 consecutive quarters of rising in prices for HDB segment.
Correct.
And for the first time in Q1 2026, price actually dipped by 0.1%.
So it was a slight dip.
Very slight.
Correct. So it's not surprise considering that the growth has been slowing down a bit. They're still growing, but the growth was slowing down.
So last quarter was zero growth.
Yeah, correct.
So now it's minus 0.1%.
Yes.
Okay.
So
what does it tell us?
So I think essentially, despite all the noise, the market is still holding up pretty well.
Okay. Let's address segment by segment. Firstly, the private home segment. Okay. Prices actually rebound despite fewer transactions. So Q1, there are fewer transactions or so. Perhaps I can explain on that. Okay, actually, if we look at fourth quarter 2025, we saw fewer new launches because towards the end of the year, as you know, is a family holidays time, right? So developer actually has slowed down in launching new developments launches, which result in price moderations. Okay, but in first quarter 2026, we saw a rebound in the new home launches as CCR launched such as Newport Residences and also River Modern. And they all performed and sold very well. Okay, even at benchmark prices. So both were above 3,002 per square foot on average. That is fantastic results for our developer. So this led to a price uplift, okay, in the overall Q1 2026 for non-landed property prices, okay, and it increased by 1%, okay, in terms of the overall price index after the 0.2% decline in previous quarter, which I say is a lull period due to family holidays and lesser launch. Okay, so good news in Q1 2026, price has actually uplift by 1%.
Okay, so let's look at transaction volume. So in Q1, there was a fall in transaction volume due to fewer new launches. All in all, there were only 4 new launches in first quarter, right? And also we were hit with a seasonal lull. You know, the Chinese New Year season was from February until March, where things tend to slow down a little bit, right? So the coming months, we should probably see an increase in the number of new launches as more of them will hit the market based on their timeline. So despite fewer transactions, prices are still increasing. This tells us that demand is still there and is very, very firm.
Okay, actually, until now we have been talking about new launches. How about resale? Now, let's put it this way. The Singapore private property market is actually driven by new home sales. As long as there's new home sales launches, the resale market will also follow suit in terms of its transaction volume.
Correct.
All right. How about the landed home prices? Okay.
So Marcus, I noticed that there is a fall in landed home prices. Why is this so?
Oh, Q1 could be a seasonal lull, as per explained by you, that it is Chinese New Year period, similar to Q1 2025. Q1 2026 is a seasonal low. Okay, so marketing activities remains limited due to price deadlock also. Why do I say price deadlock is that, you know, for landed homes market, sellers are standing firm on their selling price. Okay, and their expectations is usually higher than the last high. So because of this, buyer will need some time to get used to the new benchmark price, okay, which is increased price acceptance takes some time. Okay, so considering the increased cost of replacement home, buyers, especially those upgrading from condominiums, they are more sensitive to price as gain for non-landed segment have actually slowed down in Q1. So this result in a slight consolidation in landed home price after 7.4% rise for the whole of 2025.
Wow.
So Q1 2026, the beginning of this year, is a slight dip of 1.8%. Okay, I would not say that is like drop in prices. I would say that is like consolidation because there is a super bull run of 7.4% last year, all right, for the landed segment. And of course, in terms of transaction, demands for landed homes remains very steady, all right? And this recent dip is perhaps due to that seasonal reasons, year-end and Chinese New Year effect. Okay, we're also seeing some owners, landed homes owner right-sizing. That means they are moving out from their landed homes to condos and even HDB resale. So at the same time, rising condo prices are supporting genuine upgraders into the landed homes. That provides the demand for landed homes. Okay, so despite the short-term consolidations, demand remains fundamentally strong. Won't you agree, Eugene?
That's right.
Okay, so landed homes continues to be seen as a long-term stock of values. They call it wealth retention assets and key wealth assets. And with interest rate more favorable now, which is at its low, buying confidence remain intact for the lender segment. Okay, so it's a short-term consolidations, but demands is still strong. This is definitely a price gap, not a demand issue. Okay, so in a nutshell, Eugene, can you summarize for us?
So in a nutshell, even with fewer transactions, prices are still moving up. So you see that price rise due to strong new home sales, all right? There were fewer transactions, again due to seasonal lull. All right, so and there's a slight dip in resale transactions also due to seasonal. But then, despite all this, you notice that even with fewer transactions, the prices are moving up. This tells us that demand is still firm.
Okay, so in a nutshell, Q1 2026 private residential market is strong.
Okay, so let us now look at the HDB resale market. And in the first quarter, we saw the first decline since 2019.
Okay, why so?
Okay, so as we know, HDB has been rolling out more BTO and sale of balanced flats. So resale prices, while it has been rising, it has largely stabilized over the recent months and quarters. So in 2025, just for context, the HDB launched about more than 29,000 BTO flats and SBF, sale of balanced flats, and followed by another 9,000 in February this year.
Wow, that seems to be one of the highest number of BTO launch in a year.
That's right. So they are very focused on stabilizing prices in the resale market. So with BTO supply increasing, the demand and prices of HDB resale market has slowed down. All right,
Yeah.
the price increased and
Actually
may
so.
likely slow down further.
So
in
that
the
is
future.
fundamental, right? So
Yes.
when supply is overwhelmed and
Yeah.
abundance, then price will moderate and stabilize.
That's right.
Hey Eugene, how about the MOP supplies?
Okay, so for 2026 and the next 5 years, the average number of MOP flats we are looking at about 15,700 MOP flats. These are flats turning MOP and can sell in the resale market compared to 20,800 average over the last 5 years. So we are seeing less flats be turning MOP, attaining the MOP, and therefore the supply is lesser going forward. So in a nutshell, the 2026 HDB resale market, we are looking at a lesser supply of MOP flats coming on stream, together with more BTO flats and sale of balance flats in the future. This will possibly lead to a slower price growth going forward.
Okay, so we will touch on the HDB resale market, more details later on. But right now, I want to show you something very interesting. All right, Q1 2026 profitable deals. This is something that is very real, actual transactions where people make money and where they lose money. Okay, so let's look at Q1 2026 highest profitable deals according to region and segment. Okay, actually there's a lot of profitable deal. We have chosen the highest profitable deal just to illustrate to you in the different segment and region. Okay, first of all, CCR, resale property. Highest profitable deal is in Liden Residence. All right, this unit actually has a profit of 5.2 million, which is a profit of almost 60% over a holding period of 9 years. And then in RCR resale market, there is also another profitable deal in the Waterside in District 15. All right, the profit is 3.8 million, 225.9% over a period of 27 years. Okay, then another one is in Thomson Grove, that is in OCR resale segment, having a profit of 3.29 million, which represents 369% profit over a holding period of 27 years. Okay, interesting, isn't it? Okay, something that we observe is that there is a holding period required for profitable deals. So property ownership and investment is about mid to long term.
Yes, it's not
All
a
right?
short-term game.
Not a short-term speculative game. And also we observe that new launches has been profitable in recent years also, especially in places of transformation. All right, so in Q1, there is a unit sold at the Woodley Residences, okay, and these were bought as a new sales, holding period 4 years, 3 months, profit 34%, absolute value of 712,000 profit. Okay, isn't that good?
Awesome.
Awesome, huh?
Yeah.
Okay. Well, there is also another segment of the market, which is the landed market. There is a semi-D that is at Coronation Garden, okay, in District 10. with a profit of 8.7 million. That represents
that's huge.
more than 500% over a period of 22 years. Okay, so apparently, if we look at all the profitable deals in Q1, the summary is this: larger units usually means more profit, because based on per square foot growth on a bigger area,
Yes.
the profit will be greater for larger
profit.
units.
Yeah.
Okay, holding periods is required, as I've explained, and new launches has been profitable in recent year in places of transformation. All right, now look at the highest loss-making deal in Q1 according to region and segment. Okay, so among the regions that has the high unprofitable deals in the condos that is in District 10. Okay, over here is Clifton at Grange. All right, the sales price is it's 4.9 million for a 2,001 square feet unit, representing a 2,276 per square foot. The losses is about 2.2 million, which represent minus 31% over a period of 18 years. I'm quite curious about this deal. Actually, over a period of 18 years, if there's a loss of 31%, it simply means that it's either the units have some issues, or it's perhaps sold to a relative at a much lower than market price.
Maybe not an arm's length transaction.
I guess so, because at this price of 2,002 per square foot for District 10
Yes.
condos in the Grange, I think it's in Grange Road area. I think that is a bit of underpriced.
Yes.
Okay, then there's also another landed homes at Bradder Heights that is transacted at 11.5 million for a 4,317 land plot size. Okay, the loss is as much as 7.5 million and representing minus almost 40% losses over a holding period of 2 years, 10 months. Oh my God, that is within the SSD period.
Yeah.
So that
This
loss
one,
didn't
no-
even factor in the SSD
Yes.
that has to be paid
Yeah.
by the seller. So it doesn't mean landed property will promise you good profit.
Yeah.
All right. It means that you need to have holding
Holding
power.
power.
All right. And this one is less than 3 years and it's already sold. Perhaps it's a for sale.
Yeah.
Okay.
May likely be a for sale.
All right. Or it was previously a record high entry price. So that could be the reasons. So buy your own risk doesn't mean property always give you profitable deals.
Correct.
So where is the market heading right now? Okay, it's not about whether property works, it's about how you enter the market. The real question is where the market is heading and where are the opportunities today. So Eugene, tell us about the show flat today.
Okay, so if you have been going around to show flats, you will notice that particularly for new launches, the show flats are pretty crowded. And if you can go down and feel, you find that the buyers there are genuinely there to check out the project and they are getting ready to put in their money, right? So show flats like Vela Bay have been drawing 8,000 visitors. Tengah Garden Residences, more than 1,300 groups of buyers at the preview, right?
And what are their take-up rates actually for the recent launches in Q1?
I think if we look at the recent launches in Q1, some of the headline grabbing ones are, for example, like River Modern, Pinery Residences, and Revel Tampines. These sold, their take-up rate was over 90% in the launch weekend alone.
Right. Wow, just over the weekends, more than 90% was sold.
That's right. So it's very strong take-up for new launches. Of the 6 projects that were sold, a total of 2,455 units were sold, and the take-up rate average out is about 78%.
Over the 6 project launch.
Yes, over
in
the 6%.
Q1.
Yeah.
Okay. Well, I know that our Singapore government also actually have introduced some measures to
Yes.
counter what's happening in the current uncertain time.
Yes, so as we are aware, global uncertainty causes quite a lot of concern. So during uncertain times, Singapore government has been very proactive. We have seen that in the past, during COVID time, during
So this time it's about Iran war.
Yes, it's about Iran war. So $1 billion has been set aside as support package, all right, as a contingency, right, so far for the Iran war.
Okay, so we have seen 100 billions COVID-19 grants and
Yes.
wage support before. We have also seen 9 billions assurance package for household due to the high cost of living in 2023 and 2024.
Yes.
And also 20 billions of resilient package during the 2008 global financial crisis.
Right.
So every time there's uncertain time, like right now, while we are still talking, there's Iran war going on.
Yes.
Our Singapore government stands ready to intervene
That's right.
with support measures. Okay, and I also understand that from our banking industry friends that there is quite a lot of funds that is coming to Singapore
Yes.
because they view Singapore as a safe haven.
That's right. So our safe haven status allows us to draw foreign investors, and even during a crisis. So if we look at Singapore context, Singapore continues to draw and attract global investments.
Why?
Because investors trust Singapore's stability, right? And this puts Singapore in a good position because fundamentally we are strong in economics and also political stability.
So foreign direct investment has been steadily increasing over the years.
Yes.
All right, and in the midst of all the global uncertainties.
Yeah.
All right, not just current Iran war, during the Russia-Ukraine war, and also during COVID-19 pandemics and global financial crisis, we have seen a very steady flow of foreign investment coming into Singapore.
Yes.
Okay, so let's talk about the housing supply right now. Okay, I understand our government has been very active in government land sales,
That's right.
isn't it?
That's right.
So there has been an ample supply of government land sales
Yes. So not only in certain locations, but I think if in a variety of locations.
in countrywide, yeah?
Yes, countrywide. So there's actually something for everyone.
Right. So there no need to be FOMO.
Yes, no need to be formal at all.
All right. So a good variety of locations are introduced in the recent government land sales.
That's right.
But something that we have observed in the behavior of developer in the government land sales is that they are still very hungry for land.
Correct.
Why? Perhaps one of the reasons is because of the high take-up rate
Yes.
of the recent launches.
Yes. So developers who have sold out their projects essentially have to shop for more land to stock up.
Okay, so if we look at the recent government land sales tender from October 2025 last year till now in April 2026, almost for the last 6 months, the average bid received per government land sales site is 5.2, which means for every site that is sold, there will be one happy developer and four disappointed developer. And the 4 developers will have to
Try again.
come back to the government land sales tender and try again. Yes. And this time when they try, won't they be more aggressive in their land bids?
Definitely, especially if you didn't manage to get the land the previous time, you will be super more aggressive.
Yeah, otherwise they will not be able to get the land parcel to build new condos,
Yes.
which they have already depleted their land banks through the recent solid take-up rates.
Correct.
Okay, so the current sentiment in the GLS market scene is that developer is going all out to bid for land. Okay, so let's take a look at what really happens recently. Okay, RCR land price have actually superseded CCR land price from a year ago. Okay, take a look at this. April 2026, the Dover Road RCR land site was awarded for 1,556 per square foot per plot ratio. And compared to 1 year ago, Daniel Road CCR land plot, it was awarded for 1,410 per square foot per plot ratio. Wow. So if land cost is going up like this, what happened next? All right, I think it is very natural that development costs have increased due to land costs. And in addition, developer also faced with higher construction costs. Okay, why higher construction costs? It's because there is inflation due to the Iran war.
Yes.
So oil price has been shooting up all the way to the sky. So what will happen to transportation costs? It'll be high.
High.
When it's high, so in order to ship over the construction material to Singapore, the freight costs will be high.
Higher.
So which means that will increase on the construction costs and the
Yes.
redevelopment charges. So all this means developer have to face higher costs. And that means in the near future, the new launches will be
Higher price.
positioned at higher price. Yes. Okay, there's no doubt about it.
Yes.
Having said that, all right, can Singaporean afford higher price new condominium launches?
So, well, over the years, Singaporeans' income and affordability has been steadily rising. Okay, let's look at some of the charts. Okay, let's talk about affordability. All right, so if you look at this chart, the higher income that growth over the years, the income growth has grown by 1.3 times, right, from 2016 to current date. All right, so this means that we have higher household income, and this will support housing demand.
So in 2016, the household income is about 11.6K, and right now in 2025, the household income is 15.2K.
Yes.
What that translate to in terms of affordability of home loans and home prices?
So let's look at affordability. So based on the income back then, the average income back then in 2016, the average household can afford about $1.68 million property, right? This is based on the calculations, right?
Okay.
And the bank's lending rules.
And
So
right
if
now,
we fast forward to today, with the household income growing by about 1.3 times, you find that today's household can afford about $2.2 million.
so buyers today are stronger than before.
That's right. They have more purchasing power due to the higher income base.
So higher affordability means
So higher affordability simply means there's more buyers in the market, so we have stronger demand, especially from upgraders. All right. We also have a higher price acceptance. So even though prices may be going upwards due to cost reasons, all right, they can accept the higher prices, and this, as a result of this higher affordability, they are accessible. They are able to afford even bigger properties.
all right. So when we put all these together, demand remains strong and prices are supported to grow.
That's right.
Okay. So what you should do next? Buy, sell, upgrade, or wait?
Well, let's look at some of the things that we need to think about for decision making.
Actually, don't ask if it's the right time. Ask yourself these three questions. Number one, can you afford the property today? Number two, am I buying for long term and not short term? And number three, am I buying based on fundamental, not because of FOMO? All right. If all the answer is yes, then timing is already right for you.
That's right.
Can you once again talk about the HDB resale price? It has fell by 0.1%. Is it a right time for me to sell or wait for price to chong again? Then I upgrade.
So prices went down by 0.1%. It's a very slight drop, right? Considering that prices has been going up.
But actually, this is what we predicted previously, right?
Yes, correct. This
That
was what
with amber supply and the huge
Yeah.
supply of BTO flats
Prices
coming into the
will
market,
stabilize.
the first timer and upgraders went for that BTO flats.
Correct.
So that means there are fewer demands for resale resale HDB flats.
Yeah.
So over a period of time, what would this mean to the resale market?
more HDB supply simply means that over the next 5 to 10 years, right, when these flats attain MOP, right, there will be an influx of flats that is entering the resale market, right? So this will compete with existing resale stock, right? And this will, in end result, may cool HDB prices a little bit, right?
This is the 5 to 10 years MOP period because
Yes.
there is the standard flat that is 5 years.
Yes.
There's also the plus and prime flat.
Yes.
That is the 10 years MOP.
Yes.
So they will come in two different time,
Yes.
different segment of time. Something like from 2030 to 2034, there is a huge MOP supply of standard flats that is coming into the market.
Yes.
And there's also another huge MOP supply of prime and plus flats in the year to 2035 to 2039, before 2040. So there will be a huge MOP supply of flats coming from 2030 onwards.
That's right.
Okay, so you have seen previously between 2011 to 2015, 2011 to 2015, that during this period of time, when 115,000 BTO units was launched. So between 2015 to 2019, all right, during this period when there's a lot of BTO flats, okay, HDB resale price actually moderated. So perhaps we will be seeing the same phenomena right now, that HDB prices will also moderate all the way up to 2030 before price start to gain its momentum up again, okay, due to the huge MOP supplies that is coming up to the market by the standard plum and plus flat that is launched now in the BTO exercise. Okay, so in the next few years, buckle up yourself. We think that the HDB resale prices will continue to moderate.
Yes, that's right.
Okay, so more BTO supply will continue to limit HDB price growth or lead to further price fall. Okay, so this is happening right now. Okay, so in 2025, 2026, and 2027, there will be a slew of more HDB BTO
HDB
launches.
is expected to roll out about 55,000, more than 55,000 BTO flats.
They say, policies actually drive behavior. Okay, so what are the policies that you think will drive the behavior of HDB resale market?
Okay, so if we look at what has been introduced, the 10-year MOP, all right, the prime and plus flats, all right, they come with three kind of policies. Firstly, because these prime and plus flats, they were bought at a subsidy. So when they're up for resale, there will be a subsidy clawback amount.
And that amount can be quite huge. You can take a look at this table here for all these HDB projects that was launched February 2025 till now.
Yeah.
Okay, the subsidy clawback is as high as 14%.
Yeah.
From a low of 6%.
Yes.
So 6 to 14%.
So if we look at this table, then what it tells us is for prime location flats, the range of clawback can be based on this, is between 9 to 14%.
9 to 14.
Whereas the plus flats, the clawback will be between about 6 to 8%.
Okay, so there is subsidy clawback.
Yes.
When the owner of the BTO flats decide to sell it in the resale market in the future.
Yes.
That means you have to pay back your sales price to HDB.
Yes.
And there's also a 10-year MOP for prime and plus.
Yes.
And next is there's also a resale income ceiling.
That's right.
What does that mean?
They put a cap on the resale buyer that is eventually going to buy your prime and plus flat. So they have to be within the income ceiling of the current income ceiling of 14,000.
14,000, wow.
So unlike a 5-year MOP flat where the home buyer, there's no income ceiling cap on the resale buyer of a 5-year MOP flat. But for the resale buyer of a 10-year MOP flat, which is the prime and the plus, they come with the resale income ceiling.
So that means if someone that is buying into the resale prime and plus flat in the future, based on 14,000 income ceiling, the maximum loans that is obtainable is perhaps in the range of about 900K.
That's right. So essentially, this policy puts a limit on the price that the resale buyer is able to afford to buy the resale flat.
So can someone that owns a prime and plus flat probably in the next 10 to 15 years sell the resale flat at $2 million if the buyer is willing to pay $1.1 million cash?
It simply means that, yes, as you rightly put it, the buyer will have to put out quite a lot of cash.
Yeah, so with so much cash buying into the HDB resale market, wouldn't there be options to buy into the private market?
That's right. If you can foot out 1.1 million, why buy HDB resale?
So should HDB owners consider upgrading now?
Yes, they should. Because why? If you look at the key components that affect the private market, land cost is rising. So if you buy now versus you buy later, there's some savings if you upgrade. And
Yeah,
buy
because
now.
private home price will be
Yeah.
rising too if
Correct.
land cost rising.
So private home price rising.
Yep.
HDB supply as we have showed you just now, over the next few years is increasing. So this will put a limit on the price increase in your HDB resale.
Right, so HDB resale
The
price
market
growth will be
was
slowing down.
Yeah, and therefore affordability, as we have shown you just now, is strong today. So you'll continue to grow because household income is growing, right? And so you buy later, you'll be competing with a larger pool of buyers.
But I would like to illustrate that there is a totally different game for private homes, okay? Because for private homes, let's put it this way, one of the main considerations is the holding period. All right, holding period currently is only 4 years. So holding period is AKA like MOP.
Yes.
So you can sell, but you got to pay back SSD,
SSD.
seller stamp duty. So most seller would not like to pay the SSD, so you got to hold for 4 years minimum. And there's no income ceiling. So any buyers that buy into your private homes, all right, don't have to have accessibility on income ceiling. So next is also no clawback, all right? And no need for family nucleus to buy into private homes. And foreigners can buy into private home also. Of course, foreigners have to pay APST. And Singapore permanent residents also can buy into your private homes too. Let me also talk about private homes prediction by some of the banks and
investment.
perhaps our majority shareholder of APAC Realty, Morgan Stanley. Okay, so the prediction by DBS and Morgan Stanley back in 2017, all right, it says that property price is on track to double by 2030. And this was predicted in 2017. Okay, so during 2017, if you were to still recall, all right, back then, what are the prices versus right now? Right now, all right, the prices have already crossed 2006 per square foot in terms of new sales medium price PSF, all right, in Q1 2026. And CCR medium sales price is at 3,173 per square foot, RSCR about 2,006 plus, and OCR hitting 2,502 per square foot. Overall, on average, it's 2,662 per square foot. All right. So this overall median price set to cross $3,000 per square foot if it grows at 3% per annum by 2030. So the prediction is quite accurate. Quite accurate. Okay. Then what happens in the next 10 years after 2030? Actually, there was a report that is recently also done by DBS research team. And based on what we are seeing in the Singapore populations, all right, as you know, Singapore population must continue to grow.
That's right.
All right, from its current 6.11 million, it is projected to grow to 6.5 million by 2030, according to the National Population and Talent Divisions, and also DBS research team, that the projection by 2040 perhaps will be XX million. And with enough infrastructure that is transforming the landscape of Singapore, we will see that in a declining birth rate in Singapore, the only way to supplement our population if we are hitting all these targets is to have immigration. And also the purpose is to sustain our economic growth. Okay, so with that said, with so many people that is growing in Singapore, it also means that there is more new homes required, right? Over this period of time.
Correct.
Okay, to support larger population. So indeed, the number of new homes is as many as 200 to 300,000 needed by 2040. So every single year, you see there is about 10,000 new home transactions. So from now to 2040, if we continue to have 10,000, it's only 150,000 new home transactions from 2026 all the way to 2040, right? Which is not enough.
Yeah.
with this huge growth of population, which means demand is strong, supply not enough means what?
Price go up.
Yeah, exactly. Actually, as much as how much? Yes. So if there's a sustainable growth of about 3% per annum growth in property price, do you know that 2030, $3,000 per square foot will eventually become 4,000 in the year
Wow.
2040? Very interesting research prediction.
Yes.
All right, by our friends in DBS. So why buyers are entering the market today is based on the fundamental of, income growth, population growth, and transformation in Singapore.
Yes.
Right now in Q1 2026, all right, today we saw price stabilize, right, and perhaps rebounding.
Correct.
Okay, and interest rate currently is more favorable, right? Correct. So do you think interest rate will increase?
There could be a possibility if the Iran war is prolonged.
Okay.
And oil prices go up.
Right. So right now we are in a very favorable interest rate environment, right? Before it increase.
Correct.
Okay. And developer pricing is currently still at past land price purchase. Correct. But right now land price have actually gone up. Yes. Do you think the future launch price will be higher?
Quite likely, because they also have to factor in construction costs, which is rising.
Okay, and with strong take-up rate, does that evidence that it is actually an inflection time into the property market?
Correct.
All right, the question is not whether the price will move up. Actually, the question is whether you move before or after that.
Correct.
That's more important.
Yes.
All right.
So
okay.
It's all about taking position.
But I know we did a My Dream Home survey recently, or every year. We actually find that one of the key questions and concern is about affordability.
Correct.
Okay. Early on, you show us the medium income, household income, have actually increased affordability from 1.66 million
to about
home price to 2.2 million home price. So the sweet spot is about 2 to 2.5 million currently. Okay, so can you tell us more about affordability check based on household income?
Yeah, so it is very important to buy within your affordability, right? So based on the various household income level here, we are able to work out what is your monthly installment based on what is the current rules. And therefore, if we can work backwards to calculate the loan quantum you can take, and therefore the value of the property that you can afford. So if we look at the table on the right, let's say your budget works out to be about $2 million, right? In today's context, what can you buy in the new launch market?
Okay, so for a value that is almost $2 million is here, so that means the household income is between 13 to 14,000.
Correct.
So for something that's 2 million and below in OCR is like a 2 and 3 bedroom new launch.
Correct.
And for resale can be 2, 3 and 4 bedroom.
Yes, can be larger units.
Okay, RCR 2 and 3 bedroom and CCR 2 bedroom. Resale or above 2 bedroom. Yes. Okay, this is how you refer to this table. Oh, actually, you can do a screenshot here. On this. Well, if your household income is 20,000 a month, then you can afford something that is around $3 million.
Correct.
Okay, easy reference for you. If your household income is 10,000, then something that is in the range of 1.5 million. All right, for the asset value. Okay, interesting.
Yeah.
Let's dive into
the opportunities.
Where are the opportunities today? Okay, Eugene, run us through this master plan.
This map essentially tells us where the upcoming stock is in from now.
These are new housing precincts, isn't it?
New housing precincts. Interesting areas where you should take up position if you want to experience growth.
Okay, we see 42,000 units. All right, in the new precinct Tengah.
Yes.
Okay, next 20,000 is in Jurong Lake District. And then next, Turf City, 15,000.
Yes.
Okay, followed by Chancharu, which is in
Yishun.
northern part of in Yishun.
Yeah.
And also Bayshore in the east, 10,000. Followed by Lentor Hill, Springleaf, 7,000. And Greater Southern Waterfront,
Yes.
9,000
units.
Okay, so perhaps these are all the first mover advantage opportunities.
That's right.
And these are the launch dates.
So these are the upcoming launches, all right, that we can see. So we have Tengah Garden.
So right now in April, we have Tengah Garden and Bayshore.
Yes, and Bayshore. One North, Hudson Place Residences, slated for May. Jurong Lake District, we have Lucene Grand, right, slated for third quarter. Again, Langtor Garden Residences, third quarter. Turf City, name to be confirmed, all right, will be about third quarter also. And Springleaf area will be fourth quarter this year.
Okay, so stay tuned. These are the 2026 new launch opportunity in the new precincts.
Yes.
New precincts means first mover advantage.
Yes.
Okay, so Eugene, it's not difficult to upgrade to a new condo, isn't it?
That's right. So it's not difficult as long as you follow.
Okay, just now we do the
parameters.
affordability check.
Yeah,
so this one actually shows the down payment
Yes.
that is payable by CPF and cash.
Cash. Yes. That's
All right. So for a property price of, for example, $3 million, the down payment is 890,000 for OCR new launch.
Yeah.
And for RCR, if it's 4.47 million, the down payment is 1.33 million.
Yes.
And for CCR, let's say 5.7 million, the down payment is 1.71 million.
Yes.
All right, because we take into consideration of leverage. Okay, so once again, take a screenshot of this table here. You can actually refer to it for purchase down payment for the first mover advantage opportunity of all the new launches. Okay, talking about new launches, what have been the price movement over the years?
So if we look at price movements due to higher land costs, higher construction costs, and also for greater demand, we find that prices has been going.
And it's quite obvious, right? It's all in the
obvious.
uptrend, right?
So it's quite obvious from this chart.
And it will continue to rise.
It's not only for certain sector, it's for all sector.
Okay.
So if you buy later, you will be paying more.
Okay.
If you buy today, you're paying today's price.
So in a nutshell, this project is priced on yesterday land cost. That's why it's lower in the past.
Yeah.
Okay, in terms of launch prices. And right now, launch prices is higher already. And future launch prices is also higher. All right. Why? Because the confidence in Singapore property market is still very strong.
Yes.
All right. Despite uncertainty in the global scene. Okay. There's also rising land costs right now in Singapore and rising construction costs. And this will bring forth higher launch prices in the near future. And also, there is rising medium household income. And that brings forth higher affordability among home buyers and able to access bigger property and at the same time price acceptance. Okay, so what is your advice for someone who still think that there is a possibility of price drop in the near future? If they want to wait, can or not?
If you wait, there could be a risk.
Okay.
Right.
Of course, waiting is a decision, isn't it?
Yeah, it's a decision that
Yeah,
you take.
it is a decision, but every decision comes with a cost.
Yes, opportunity cost.
Opportunity cost, yes.
You miss out.
Yeah, I think opportunity cost is, if I ask you, 2017, if you have taken action, would it be better now?
A lot better.
Yeah, if you never take action, you wait. That's
missed
the
it.
opportunity cost that we're talking about.
Yes.
Okay, so that also means there is price risk. Well, it all depends on the type of property you're holding. So if you're holding a property that is stagnant in its price growth, all right, or in the near future, the price will also not grow very substantially.
Yes.
Because of what's happening in terms of supply in the market. This will also means that perhaps it's time for you to rethink your strategy and make your move. Because the later you make your move, there is a risk on time, which is
Shorten your runway.
shorten your runway.
Yeah.
Means the banks will also assess you,
Yes.
okay, whether to loan you
Yeah.
enough loan for the right size property that you want to buy.
right.
Okay, so it's you want to wait, the banks cannot wait for you.
Yeah.
Okay, so the question is not whether to wait, is what waiting will cost you. So that's it for today, Realty Talk.
Yes. Till our next segment. All right.
So,
We'll see you again soon.
okay, have a great day.
Thank you, Marcus and Eugene, for your valuable insights. If you'd like to explore the opportunities discussed today, our ERA trusted advisors are here to help. Before you go, we'd love to hear from you. Please scan the QR code on the screen to provide your feedback on the session. We look forward to seeing you at the next session. Thank you and have a wonderful evening ahead.